Let's take the discussion forward with Mr. Anuj Puri, the chairman at ANAROCK Group, to understand how exactly these trends are panning out. Anuj, hi, good afternoon. Thank you so much for joining us and speaking with us. First up, as far as the entire residential demand is concerned, there was a bit of concern that with the increase in interest rate prices plus the entire volatility and uncertainty when it comes to the macro factors, there would be a bit of slide when it comes to the demand for real estate, and also the pent-up demand is over. Is there any sign of plateauing of demand?
Thank you very much. It's always a pleasure to be with ET now. We're not seeing plateauing of demand. I think there are three or four trends that we are seeing though. One is despite the increase in the interest rates, the demand for housing continues to remain strong. Although we do believe is that we are really coming up to the level that if it goes up by another sort of 50 to 75 basis points more, then there could be an impact on the demand. Second is we're seeing that good quality developers and largely the listed guys doing exceptionally well on the sales. They have launched and they have sold 100% on many of these occasions. They have very little balance inventory under construction that is left. They're going aggressive to acquire new land parcels. But on the other hand, the sort of tier three kind of developers are struggling big time to be able to sell their inventory. The buyer has become very discerning. They're not wanting to buy from a quality tier three developer. Despite the tier three developer wanting to bring down the price, still the demand is not moving there. So, clear consolidation that we are viewing. And then we are continuing to see the momentum coming in from the millennials. That they are wanting to buy more and more residential and not necessarily going for the rental. That's where we're seeing the large, good quality developers continuing to demonstrate strong sales. But overall, we do see is that it is sort of getting neutral in terms of the demand. Why all these listed guys are doing exceptionally well is because they're sort of eating into the pie of the tier three developers.
A very good afternoon to you, Anuj. This is Cheryl also joining in the conversation. And let's talk about the segments that we are seeing an uptick when it comes to the residential products. You have good growth coming in for the premium segment. At least you've seen a 28% growth when the new projects are launched in the premium segment. Are you seeing some more demand in that segment? That's the reason why you're seeing a lot of launches. And how has the pricing trend been in that particular scenario?
So two things that we are seeing very positive. One is the ultra luxury. When I say ultra luxury, for example, in Bombay, anything above 20 crores doing exceptionally well. And so is in the NCR region. So ultra luxury, I think the rich have become richer during the COVID tenure, as a result of which a lot of demand and sales on the luxury part. And the second is the premium, because people have wanted to go into bigger space, better space, new quality space, more open area, more sort of gated community, which is in that premium segment. So both these we have seen pretty strong demand. In terms of the pricing in the premium space, we have seen 5 to 7% increase over the last 12 months in the sale price. That is largely taking into account the cost of input increase that has happened of the developers. They're not necessarily becoming greedy. All that they're trying to do is pass the input increase in the cost to the home buyer, and yet focusing on the momentum of sales, on their cash flows, on reducing the debt. And that is what their priority is, rather than necessarily increasing the profits.
Well, Anuj, Cheryl and me are definitely not the best people to talk about that premium segment of over 20 crore property. Maybe you're better placed to know that. But let me talk about the other segment, which is the commercial real estate as well. We've spoken a lot in terms of how the residential properties are doing. But what about the commercial real estate? Are you seeing an uptick? Because there were recent reports talking about how in Bangalore, with work from office now coming back into the picture, the commercial real estate is picking up as well. What are the trends there?
I think two things that we're seeing, particularly in that city, Bangalore. One, it has become an ecosystem for the startups. I mean, a lot of unicorns are there, a lot of the startups. Second, what we're seeing is because of the pressure of cost in the US, a number of the US corporates are starting to outsource more and more work to Bangalore. And I think there are two reasons for that. One is the cost arbitrage, but I think the bigger reason is the quality of talent and the availability of tech talent in Bangalore. And that is propagating the demand and the absorption of the office leasing. which really for the first half of this calendar year was exceptionally high. It was one of the best that we had seen in the recent past. The second half of the year has slowed a little bit for Bangalore, but we do believe is that overall it'll be a very good year, given that US corporates are outsourcing more and more to cities in India, particularly Bangalore, not only for cost arbitrage but for availability of talent. And secondly, because a lot of the startups and the unicorns are headquartered in Bangalore, they are wanting to take more space in that city.
Anuj, on that note, we let you go. Appreciate you joining us and talking about the trend, what's happening in Mumbai with respect to the premium segment, what's happening with respect to the organized versus unorganized and the consolidation in the sector, plus the entire commercial real estate space. And the takeaway is that the demand trends continue to be quite strong across the board, though there is a tad bit of neutrality which is coming into the picture given the interest rate hikes. On that note, slipping into a very short break.